Hey YouTube, welcome to this channel. The stock market is going down and hopefully it will be a W-shaped recovery. That's why I thought why not to make video to find out the best ETF to take advantage of that dip. As I generally manage my portfolio with ETFs and stable investments, so it's important to talk about the growth ETFs which are more secure and can be used to buy more companies during the market correction. Also, don't forget to subscribe and stay tuned because I'm gonna make more videos on dividend ETFs and ARK ETFs as well. Okay, without any further delay, I'll explain all ETFs in my list and then I'll do a quick comparison. Number one in my list is ARKG. ARKG is the most disruptive ETF in my opinion, and you all know the ARK for its bets on innovative industries. So ARKG is targeting genomics. Many ARKG companies are doing research on CRISPR and therapeutics. So in healthcare, especially this sector has a lot of potential. And me as a novice person without proper medical knowledge, this ETF is best to invest in the health sector. Second in my list is RK, a famous one. Tesla is the number one holding in the ETF. This is focusing on disruptive innovation like fintech, genomics, internet and so. Right now, RK and ARKG both hold 56 companies. Third in the list is QQ, again a famous ETF by Invesco based on Nasdaq 100 index, focusing on the tech industry, highly stable, holding almost 102 companies. Fourth one is Dow Jones Internet Index, which is focusing on internet industry with mostly tech companies targeting e-commerce, cloud data and social media. Last one is Vanguard Small Cap Growth Index, targeting small cap companies. So without any further delay, let's compare them quickly. So net asset value and market price for all ETFs are currently the same, which means no one is at premium or discount. Expense ratio of ARKG is higher, 0.75%. So technically QQQ, FDN and VBK are better here, and VBK is somehow managing 0.07, like seriously 10 times less than ARKG. QQ is being most famous because average trading volume is much more than others. PE ratio is important because it tells if the ETF is expensive or not. Right now, every ETF is highly expensive, but ARKG is at 33, which is least expensive among all, and RK is on fire, I think because of Tesla maybe. But FDN and VBK are also not bad. But certainly P is not the only measurement because growth factor is important. So past performance tells the ARKG had performed much better than RK and QQ, whereas the VBK has performed worse here. Beta value of QQ is amazing and ARKG is more volatile. 1.5 means if benchmark index say Nasdaq is down 1%, ARKG is expected to get 1.5% down, and similar in the bull case. Finally, the ARKG and RK are the best ETF in my opinion right now, even if they are spending more on expenses, but their performance and future growth is much better than the others. Most of the ARKG companies are research based and plenty of them would likely to get unsuccessful, and market correction would be more impactful on this ETF for sure. So in my opinion, ARKG and RQ are the best ETF, and I have both in my portfolio and I would definitely increase my position in these ETFs. So that's all for the day. Don't forget to subscribe and hit the bell icon, and also don't forget to comment down below. I'll see you in the next video.